Hello, welcome back to class. And this class we will look into the withholding tax and value-added tax, the computation. It's a brief one, and we will look into the nature and purpose of withholding tax, the rate, deduction, and remittance rule, the concept of VAT, the practical computation of VAT, in terms of input and output method. We look at VAT on import, export, and exempt supplies, and return and penalties for non-compliance. And withholding tax is actually an advance payment of tax deducted at the source of income. And the core concept is actually the payer, which is or who is the withholding agent, and deduct tax and remit it to the tax authority on behalf of the recipient. And the purpose of withholding tax is to ensure government gets tax revenue upfront, to act as a compliance and tracking tool, also to catch income and non-residents who may not file returns. And the key legislation under this is the CETA, the PITA, the PPTA, and then the CGTA. Looking at the withholding tax rate for resident beneficiaries, we have a type of payment to be dividend, interest, royalty, rent, and the rate for company is 10% and for individual is 10%. For contract, professions, and consultancy fee commission, the rate is 5% for company and 5% for individuals. And for directors fee, it's 10% for complaints why it is not applicable under the individual. And the withholding tax agent, withholding agent is any person or company making a specified payment, and they are legally responsible for correct deduction and timely remittances. And the withholding tax for non-residents and compliance, it's looking at the higher rate for non-resident. It's often 10% of for many services like the management, technical services, as it may be the only tax collected from them. And as per the double taxation agreement, it will be provided for lower treaty rates if conditions are met. And compliance is actually crucial. And these days we deduct at the correct rate, remit to FIRS within 21 days after the month of payment, issue a withholding tax certificate to the payee, and file a monthly withholding returns. This is the compliance, the things to comply with in withholding tax for non-residents. Moving to VAT, we've seen that it's a consumption tax on the supply of goods and services, ultimately borne by the final consumer. And the governing law is the Value Added Tax Act, as amended by the Finance Act, and the rate is 7.5 currently. And the key principle is that businesses act as tax collectors for the government. They charge VAT on sales, which is output VAT, and can claim back VAT on purchase, which is VAT, input VAT. And then looking at it, output versus input VAT, these are the mechanism of VAT. And for the output VAT, VAT charged on the sales or services that are being rendered. And to calculate it, this is value of supply multiplied by 7.5%. And for input VAT, it is VAT paid on the businesses' purchases and or expenses. And this is calculate, to get the net VAT payable, it is net VAT is equal to total output VAT minus total recoverable input VAT. And the result is that if it is positive, you pay FIRS, the component, there is a payment of FIRS, and if negative, VAT, there is a VAT credit and or carried forward or refundable as such. We also have blocked input VAT, which is non-recoverable, and these are not all input. Not all input VAT can be reclaimed. Key blocked items include entertainment expenses, passenger motor vehicle, goods and services for personal use. And why is this coming up? It is to prevent businesses from claiming back VAT on non-business or luxury consumption, preserving the tax nature as a levy on final consumption. We also have VAT on income and export. For income, these are VAT payable at the point of entry, which is 7.5%. And for VAT, it's actually for VAT registered businesses, and this is recoverable as input VAT. And for exports, it's a zero rated VAT, which is 0% VAT. And then its exporter changes no VAT to foreign customer, but can reclaim all related input VAT. And policy reason is that it makes Nigerian export competitive internationally. Treatment of losses. When it comes to withholding tax, we deal with this as per okay, this is for filing, sorry, that's for filing and penalties. And when we talk about the filing and penalties, when we talk about the filing and penalties, for withholding tax, we have 21st of the following months as the filing or payment deadline, while the key penalty is the penalties plus interest for late remittances. And for VAT, it is 21st of the following month, and the key penalties are late filing attract 5,000 per month, late payment attract interest as such, and for failure to register, it attracts 50,000 plus 10,000 per month. In conclusion, withholding tax is an advanced payment system. There is need for you to know the correct rate for resident and non-resident compliance rests on the withholding agent. The need to know it rests on the withholding agent, and VAT is a consumption tax, and you need to master the computation as it relates to input and output, and also the net VAT. And you need to distinguish carefully between exempt and zero-rated supplies, and then you need to also identify block input VAT, which are entertainment and cars, which increases business costs. And it is very important that you note that compliance is not negotiable, and this is very important. Thank you for listening.